we have something exciting to unpack today. Mansa-X, that's an interesting fund that gives you access to assets within Kenya and outside of Kenya, as well as assets that cut through different asset classes. To unpack the third quarter 2020 performance, we are joined in studio by Mr. Nahashon Mungai, who is an executive director at Standard Investment Bank. Welcome to the show, Nahashon.
Thank you, thank you.
What's going on with investments at this point in time?
Well, I mean, it's definitely more exciting, and this year has been an exciting one. And as I've always alluded to, I think 2020 continues to bless us with more opportunities to invest and to find new avenues to make money.
Okay.
The volatilities are up. We expect that this is going to continue into the fourth quarter of the year, so it's an exciting time.
Okay, interesting, because the last time we came, there was not too much volatility, but then the time before that, we just got into the onset of COVID-19.
That's right, that's right.
Okay, so where's the volatility? What asset classes are mostly volatile at this point?
So right now, mostly currencies. I mean, there's a lot of concerns around the yield, especially on the dollar itself. The Fed continues to be the main focus point for market participants. Everybody wants to see how much the Fed can continue to stimulate the economy. We have the stimulus debate on Congress right now, where the Republicans want to inject over about $1.8 trillion, but the Democrats want more at $2.2 trillion. And even if they meet halfway, that's a significant amount, considering the Fed has already injected $7 trillion this year alone.
Okay.
So it's very exciting times. So we think that the thing to watch will be how this impacts on the dollar, and therefore how all the other assets then behave against the dollar, specifically commodities like gold, currencies like the euro and the pound.
Okay, so currencies at this point in time, and also U.S. stocks, in as much as they're going into an election cycle.
Correct, yes.
Okay.
Yes.
Is there that kind of volatility in Kenya? We have BBI as a report.
I don't know.
Actually, no, it's not too much. It's been a very quiet period.
Yeah.
Okay, fantastic. So I guess now we can get into Mansa-X, and our graphics can help us put up the performance of this particular Mansa-X as a product.
Yes.
So Mansa-X is about 21 months in terms of being in the market and actively being rolled out into the market.
Yes.
How has it performed so far? What was the performance for the third quarter?
All right, so we were fortunate to catch up in Q3.
Yes.
I remember I think at the beginning of Q3, I think I was here, and I mentioned that we had a less than interesting second quarter for obvious reasons, especially the COVID-19 pandemic. So in the Q3 quarter was very critical for us because it was important for us to catch up so that we can be able to align our returns with what we returned last year.
And that was 29, I think we already have it up there. That's 29.38%.
Yes, 29.38%.
Okay.
That's what we did.
Okay, that's some good performance. But what was the key driver for the recovery?
I think Q3 for us as a fund, just like most funds globally, it was a time to capitalize on some very unique movements. If you look at the tech-heavy NASDAQ, for example, in September alone, it moved over 20%. And we capitalized on such movements. If you look at how the dollar weakened against certain currencies, the euro, for example, gained around 4% against the dollar. Now, if you're trading this in a leveraged portfolio, that's a significant movement.
Wow.
If you look at the cable, which is a pound against the dollar, rallied around 3% the same period. So, and then there's gold. Q3 was we saw the highest levels gold has ever printed, almost doing $2,000 an ounce. That was also very exciting. So Q3 had a lot more opportunities than Q2, mostly because market participants had now relaxed and they were ready now to trade a lot more than they did in Q2. So volatility was back. S&P 500 again printing new highs above 3,400, where it still is up to now.
Okay.
And all these opportunities meant that for a fund that's diversified and is investing in all these assets, there are more than enough pickings to make a return.
I hear you talking about opportunities outside of Kenya. Were there opportunities inside of Kenya that actually were able to whet your appetite in any way?
Absolutely. I think Q3 was very exciting on the fixed income space.
Okay.
Interest rates were, and even now, continue to be on a downward path. We expect that this is going to continue. Government borrowing appetite is still high. And this has been very exciting there for a fund like ours, which also still trades fixed income. And that was also give us some good pickings, especially with the longer dated papers that were offered by the government, specifically from the 10 to 25-year papers.
Okay. So when you say interest rates are coming down, how is it that you're making money? How do you position if somebody is watching and they want to understand how to trade fixed income based on the outlook on interest rates? How does one think about that?
So how you invest in fixed income and how you make money from fixed income is really just predicting where interest rate movements will go. So when you buy a fixed income paper, you can sell it, okay, say you buy it at a yield of X percent, then you'd be looking to offload it to somebody else at a lower interest rate, and that's how you make your money.
Okay.
So typically fixed income traders will make their money if interest rates are falling, the value of their holdings will go up.
Okay, fantastic.
Yeah.
So that's the only opportunity that was available in Kenya. And then you've talked about gold, you've talked about currency.
I'd say also maybe banking stocks. There were some nice moves.
Yes,
there were some nice moves in Q3 where I mean we saw some banking stocks trade within a range of, like, if you look at equity, between 33 to 37, and that range was quite predictable. And if anyone was following markets on the daily, there was some money to be made from that as well.
Yes.
Yeah.
Okay, so we wait and see now what happens.
Let's wait and see. Yeah.
Okay, and then what about the growth of this particular fund? We've seen the growth going, year in, year out.
Yes.
I think the last time you were here, we were probably talking about, is it 1.8 billion?
Yeah, I think 1.8. Yeah.
1.8.
Yes.
How is the performance of that in terms of the uptake from the local market?
I think investors are still excited about the fund. We are getting more and more investors into the fund. We've now grown. We are 2.5 billion as of today.
Okay.
And we expect this to increase with time.
Okay.
Yeah.
And are you getting people who are based in Kenya who want to buy, or is it people in the diaspora who are making investments back home?
Interestingly, most of our investors are local Kenyans.
Okay.
And I think a lot of Kenyans have understood the concept of Mansa-X, and they've understood the concept of investing in a fund that invests in several asset classes. So it's mostly just local Kenyans.
Okay.
We have some diaspora clients, yes, but most investors are local.
And invest in shillings, or is it in hard dollars? Because of
In
the
shillings
exposure?
mostly.
Okay, in shillings.
Shillings, yes.
Do you give leverage to your clients?
Yes, we do. I mean, there's an aspect of the fund that employs leverage.
Yes.
Not a big portion of it. I'd say we typically, our internal limits don't allow us to leverage, have leveraged assets that exceed 20% of the portfolio.
Okay.
But there is some level of leverage, yes.
Okay.
Yes.
And then talking about the allocation in the portfolio, has this changed? What are you overweight? What are you underweight in the portfolio? If that's information you can share in the public realm.
Well, I'd say right now we are still overweight on some cash equivalent assets. Interest rates continue to be predictable at the moment, so there's no point in being in more volatile assets while there are easy pickings there.
Okay.
But we are also still heavy on commodities, and still we are also very heavy on global single stocks.
Okay.
Yeah.
Commodities, gold, oil.
Gold continues to be our favorite. I think every time I come on this show,
there's always a conversation.
There's always a conversation around gold. I mean, it's lost a bit of value, especially towards the end of Q3, and that was a drastic, sharp reversal. We still think it continues to be worthwhile to hold in anyone's portfolio for a while, not just a fund like ours. So we continue to hold the same weighting that we've held since the inception of the fund.
Okay, so if somebody is holding gold, is it better to hold gold as an asset, or is it better to actually hold hard currency and not do anything with your hard currency, especially for Kenyans who tend to have dual accounts and they're holding hard currency or holding Kenya shillings?
Well, right now, I think, in all honesty, the dollar might outperform gold locally. So if you're a Kenyan and you had an option of holding dollars against shillings that you earn, then it might outperform holding gold.
Okay.
But if you then buy gold again using a dollar-denominated instrument, say some sort of total return swap or an ETF that's dollar denominated, then you get the best of both worlds.
Oh, wow.
You get dollar, which is appreciating against the shilling. Shilling has lost over 8%. I think now 9% as of today, this year alone.
Yes.
And gold has gained 25%. So you'd be looking at returns closer to 35% year on year just on that asset alone. So it's a good time for Kenyans also.
So not holding the new gold ETF. Maybe.
The new gold ETF, you can buy the new gold ETF, and there are ways that you can trade the new gold ETF. It's Kenya shilling denominated, and if an investor wants to hold it and create a dollar asset out of it, this is something that we at Mansa-X can advise them on how to do that.
So we just need, if you want to figure out how to make money, we just need to find you and talk to you, and you can give us a solution. as well as a golden pot of
That
money.
would be, yeah, we'd be happy to. We'd be
Okay,
happy
fantastic.
to.
So
Yes,
happy
we'd be
to have
happy
that
to.
conversation.
Yeah.
Okay, what about other commodities such as oil? What's happening there? Because we've seen a bit of unfortunate events unfold in Nigeria earlier this week.
Yes.
And we've also seen Russia coming to the table and saying that they want to actually manage the supply as well as the price of oil. How is that particular market looking like?
I mean, since the movement, the major movements we saw in April for oil, when oil tanked to under $0 a barrel, which was crazy. Oil has pretty much stagnated right now around $40 a barrel, and the geopolitical risks, as you've just alluded to, are very high right now. I think it's easier to trade metals right now. The direction is still not very clear. Just other than the geopolitical risks, again, there's the issue of, are we going to have a second wave of COVID-19 coming in? So you might have lower supply, which should obviously increase the prices. And then again, the demand might then fall off again in the fourth quarter. So it becomes a very hard call to make. So right now, if you're trading oil, it becomes very difficult to make a long-term play for it. And it'd probably be easier to play it short-term or not at all.
Okay,
Yeah.
so if you're going to look at commodities, you're really looking at precious metals.
Metals, I'd look at gold and silver.
Okay, silver.
Yeah.
How is silver doing? What's happening
It tracks
there?
gold.
Okay.
It tracks gold.
Okay.
So it's but it's more volatile.
All right.
So sometimes, if you're looking to have a weighting of gold of say X, then in silver you probably have a quarter of that size.
All
Yes.
right, fantastic.
Yeah.
So you've gone through gold and the precious metals, the commodities
Yeah.
market.
Yeah.
Maybe now we can come and touch on currencies. I think earlier in the show you gave us some currencies that were doing well.
Yes.
You've given us your outlook on the dollar and especially what's happening there.
Yes.
Are there some pairs that stand out on a short-term basis between now and the end of the year that possibly people could look out for?
I think for now just focus on two pairs. Just
Yes.
the euro against the dollar and pound against the dollar. I mean, those should be very interesting just to hold towards the end of the year. They're very good predictors of dollar strength.
Okay.
So if you're looking to short the dollar, I remember I think last time I was here I predicted that the dollar might lose value. It has lost value.
Yes, it has.
We expect that this will continue happening into Q4. And if you really want to take advantage of that, of course the two major currencies to trade will be the pound and the euro.
Okay.
And then of course, unless of course you're also trading US Treasury yields, which again I believe will continue to fall.
Yes, they have been falling.
They
I
have
always
been
look at those
falling.
yields. I'm like, it doesn't compare because the 10 years, I think, below
Under
zero,
1%.
Under 1%.
It's ridiculous. Yeah,
Exactly.
can you imagine holding 10-year money for that price?
For that long, and
Yeah,
yet
it's
in
crazy.
Kenya you actually get it 10.4,
10,
11.4,
11, yes.
10, 11%.
Yes.
So that's very interesting. Okay, now let's talk about shares. You said that you are overweight single stock opportunities.
Yes.
So this single stock opportunities, is it in the US market?
In
or
the
are there
US
other
market,
markets
the
that-
US market is the most exciting. I mean, especially for tech stocks. And just to anyone who's listening, just to warn them, our biggest concern has been whether the tech stocks have actually overheated.
Yes.
Because if you look at stocks like Tesla, Apple, Amazon, the FANG stocks, let's just start with those: Facebook, Amazon, Apple, Netflix, and Google. We feel that most of them are higher, above 80% year-on-year growth. That's insane.
Mm-hmm.
And a lot of this is obviously due to what has happened around COVID, a lot of tech uptake, and this is expected to continue. However, we are concerned if there's any slowdown in stimulus in Q4, maybe you might see a lot of what you call rotations. So fund managers starting to switch from growth stocks to value stocks.
Okay.
And tech stocks are growth stocks. And this is especially around how the valuations for tech stocks are done. So they will use, as we were just discussing, like the 10-year yields, for example, to present value, the value of most of these stocks.
Exactly.
And with yields falling, then the valuations for most of these stocks have been so high. The question is, even a very small slight change in that yield can
Yes.
alter the valuation significantly, which might cause that rotation.
Okay.
So whereas, yes, we've had a good run with them, we are cautious in Q4.
All right,
Yeah, we're
cautious in
cautious.
Q4.
Yeah.
But what about the sentiment? Because 2-3 weeks ago, everybody was like, okay, you really have to pay attention to the election cycle.
Yeah.
But now we're in a place where people are saying if Joe Biden comes in, he'll still continue the stimulus package.
Yeah.
If the Republicans still win, they'll still continue the stimulus package. Does that still have any impact in terms of the outlook and the overheating on U.S. equities?
It still will, because if Biden, say, got the presidency, one of the things that will change is there'd probably be a less aggressive U.S. trade negotiation stance.
Okay.
And if that happens, then it might increase the outlook for global stocks, non-US stocks, again causing some sort of rotation by money managers from US stocks again to stocks held in Europe and so on.
All right.
So again, this might still depress US stocks.
Okay.
So whatever the case, a Trump win is still the best for US stocks.
That's the best thing for you.
Yeah.
If anything changes, what are you doing? Do you short the stocks? Do you?
Obviously.
Okay.
There are certain stocks that will short.
Okay, so
Yeah,
the
obvious.
next 2
Yeah.
weeks are very critical
Very
in terms of
critical.
understanding what's
Very
happening in the US market.
Yes.
We are discussing Mansa-X as a product and understanding what is happening with different asset classes globally. Mr. Nahashon Mungai has joined us in studio. He is an executive director at Standard Investment Bank. Welcome back to the show, Nahashon.
Thank you. Thank
Just
you.
before we took the break, you gave us an overview in terms of currencies, what pairs could possibly do well. You've given us an overview in terms of US as an economy, the geopolitics, the upcoming election cycle.
Yes.
We've also talked about commodities
Yes.
and the outlook for that.
Yes.
Are there any other assets that Mansa-X has exposure to, and what's the outlook for this?
I mean, that's pretty much it. And then, I mean, and then variations of how we trade those assets. So I would say, I think we've covered everything there.
Okay.
I don't know. I don't think
Okay,
we missed out
so
on
we've covered everything.
Other than
Okay.
maybe just talking about the global, the indices themselves.
The indices,
Trading
okay.
the indices themselves,
Okay.
which sometimes it can be a lot more predictable than individual single stocks.
Yes.
And we expect that this should be very exciting in Q4.
Okay.
And also very hard, much harder to trade. I mean, with now the allegations that there might even be tampering in the U.S. elections.
Yes.
Whoever thought you'd be hearing some of these things?
You only thought that this happens in Africa only,
yeah.
but it happens everywhere.
Russia and Iran have been accused of tampering with U.S. elections, possibly.
Yes.
So you don't know. You might even have something like a postponement of the whole thing, and this will really affect markets.
So the next 2 weeks are very critical, actually.
Very critical.
The next
Very,
2 weeks.
Very critical.
Okay,
Yeah,
interesting.
yeah.
Okay, now let's go back to the performance. So third quarter was a good quarter. You and
Yeah.
your team were able to redeem yourselves. Congratulations, because
Thank you.
29.38 it's a very good return
Thank
in
you.
1 quarter.
Okay.
So should this be the trajectory here on?
Well, hopefully. I mean, one of the reasons why we underperformed in Q2 was the defensiveness with which we approached markets. Again, Q4. I mean, Q3 we were quite aggressive, and that shows in the returns. Q4 will be a mixture of both, because we are about to close a year. It's important for our clients to to have a good close to the year, and at the same time we still have to give a reasonable return, something close to what we gave last year or even better.
Yes.
But again, we also have to be very careful around all these geopolitical risks that we are seeing.
Okay.
I mean, there are a number of factors. In Q4, you have everything from Brexit to U.S. elections to concerns around the stimulus package. You have concerns around whether the U.S. and China trade tensions will continue, especially if it's used as a narrative in the Trump campaign,
Okay.
and how that affects markets. And it really affects markets. One tweet from Trump saying anything negative or positive about the relationship with the Chinese will alter markets significantly.
Exactly.
So Q4 will be essentially something like Q3, but on steroids, so to speak.
Okay, interesting.
Yeah.
So if I'm looking at this particular fund and I put in my money, say at the beginning of 2020 or any point in time during 2020,
Yes.
based on this returns,
Yes.
I know you cannot predict the future with certainty. You can
Yes.
only just do the best in terms of maximizing the opportunities.
Yes.
Can I look at this and say in 4 years, my 250,000, which is the minimum that I invest, will have doubled?
In 4 years, well, close to yes, exactly.
Yes.
Even after fees, yes. If we kept the same trajectory.
If you keep the same trajectory.
If we keep the same trajectory.
Okay. And,
yeah.
and how do I get in and how do I get my money out?
So getting in is quite simple. So there's a KYC process that you go through. So you just contact us,
Yes.
and there are many ways of doing this. You can contact us by calling us directly. You call someone. I mean, you call the office. Someone will be in touch with you and give you the requirements to open. So you open an account just like any other bank account. So we take you through a KYC process. We let you know why you need to wire your funds after you've completed your KYC process. Our custodian is I&M Bank, and then after that you will be given a business confirmation. We confirm that we've received your funds, and now we are ready to trade for you. And say our recommended lock-in period is 6 months to 1 year.
Okay.
So say after 1 year we've given you a certain return, and you want to withdraw a certain portion of the fund or maybe you have an emergency and you need the money.
Yes.
The process is even simpler because every client gets allocated a relationship manager. So you just get in touch with your relationship manager and they make the withdrawal on your behalf as quickly as our turnaround time is under 24 hours for that.
Okay.
Yeah.
And when you say distributing returns, how does it work? So for instance, in this quarter, you've made 29.38%.
Yes.
Previous quarter, 16.08%.
Yeah.
How do you distribute returns to shareholders?
All right, so we use a system very similar to how every other CIS in the country works.
Okay.
So the fund, in a sense, will get into all these investments in some sort of pooled vehicle, all right, but accounts for every investor are completely segregated. So our fund management software is able to distribute on a daily basis the gains or losses that the funds makes. And that's how you then get your return in your individual account based on how the overall fund is performing.
Okay, so then I think on a regular basis, if I'm a part of this particular community, then I get a statement that shows me the value of my initial investment.
You get a quarterly statement.
Okay, a quarterly statement. Okay.
Every quarter you'll get a comprehensive statement showing you how you're performing, how your fund, I mean how much we're giving you in terms of returns and how much we're deducting from you in terms of our fees.
Okay,
yeah.
And then you said that in perhaps the holding period, a good holding period is 1 year.
Yes, that's a recommended period.
All right, then after 1 year you can be able to access. Is there like
actually we don't have a lock-in. I mean, we do not have a penalty if you withdraw sooner than that.
That's what I was getting at.
Yeah, we do not. And the reason for this is because one of the biggest qualities and one of the biggest things we pride ourselves in Mansa-X is the fact that we invest in liquid assets. So we pride ourselves in the fact that if an investor feels that maybe it's an emergency and they need their funds, they should be able to access the funds.
Okay,
because we're not in illiquid assets at all. Yeah.
Okay, interesting. And then after that, if perhaps I put my money in and the minimum is 250,000, I hold it for a year.
Yes.
Do I need to sort of a time period, maybe a day, 2 days, 3 days, if I wanted to pull part of my money, or how does it work?
All right, so you invested today and 2 days later you...
No, not 2 days later.
Okay.
Like maybe I invested in end of 2019.
Yes.
And it's the end of 2020 and I was hoping to do something January of 2021.
Yes. So again, just let us know.
So it's just as easy as communicating with your relationship manager.
With your relationship manager. Okay. I mean, we have over 40 staff on standby just to communicate and interact with the investors and execute their orders and requests.
All right. Yeah. Actually, let me correct myself. I said if I invest 250,000, it would take me 4 years to actually double. It's much less. Because that's let's say about 20 a year. Yes.
That's 80%.
Okay.
So it is.
Yes, so it is.
It is correct.
Okay, interesting. Yeah. Okay. Yeah. And then how is the uptake? How is the appetite? How is the local investor? Because you do engage with investors on a day-to-day basis.
Yes.
And I like the variety in terms of what you have in your particular fund.
Yes.
Because when I look at the returns, when you talk about those returns, when we come to looking at Kenya, we'll probably look at fixed interest.
Fixed income, real estate maybe. And maybe some stocks. Yeah.
So stocks, I mean, they've been volatile, but real estate, you're lucky if you get an 8% yield.
You're very lucky if you do.
So
probably under 6% now.
Probably under 6%. And then if you look at fixed income as well, the 1 year is now 7.8%. So you're barely covering your inflation cost, right?
It's tricky.
Okay.
I mean, unless you're going for longer dated papers.
Yes.
In which case, unless maybe you're trading significant volumes, it might be hard to get in and out.
Okay.
Again, so I mean, local solutions are less and less, and that's why again we felt as SIB that we need to create a platform that helps investors access all sorts of asset classes.
Okay.
Even derivatives, for example.
Okay.
Of which we also trade.
Locally or externally?
Both.
Both markets.
Both markets.
Okay. So when you engage with this kind of investors, the ones that are currently on your platform, as well as people who want to come in, what's the sentiment that you get? I'm sure they're extremely excited by the return.
They're very excited,
but what's the frustration? So in other words, what's Mansa-X trying to solve in terms of investment opportunities in this part of the world?
It's a good question. I think the first thing is to give returns irrespective of market conditions. That was very important for us because, as you mentioned, with very limited investment opportunities locally, it meant that if there was any underperformance in any of them, it meant investors had to wait for years to get any sort of return. That was frustrating for investors.
Okay.
And then, so that's one of the things that we needed to solve, and we did that by, of course, increasing the mix of asset classes that we trade. And the second thing, and this is the kind of feedback we get from investors, especially now, is liquidity. A lot of investors are concerned about, if I need to access my money, how quickly can I get it?
Exactly.
You know, are you going to tell me that, you know, no, we are not giving you your money now because of reasons A, B, and C? That's a big concern for our investors and continues to be one of the biggest concerns that we see from potential investors right now. Then, of course, the third one is return.
Return.
Yeah, and it's very interesting because I've seen the evolution of the Kenyan investor. When we started this fund, most investors were most concerned about, am I going to make a good return? Are you going to double my money? And so on and so forth. Now, liquidity is like one of the key concerns. Can I get my money back? And therefore, as a fund, that's one of the things that we are very careful about. Then the other thing that's very important to them is just, you know, how do you govern the fund? Is this fund well governed? Do you have proper corporate governance? Do you have somebody who oversees your activities and so on? Are you regulated? Are you audited? Those kind of concerns now seem to be more of a concern to investors.
Okay.
Yeah.
And especially, I guess, as we're getting into the tail end of this current election cycle, because now we're getting into the political season.
Oh, yeah.
Are you getting then
2
more
years,
demand?
2 years.
I mean, we're already going into referendum,
Kenya,
and then after that, there will
yes.
be a general election.
This is so unfortunate for this country, but I mean, 2 years to elections, and we're discussing
We're already
this.
discussing this.
It's crazy.
But then there's an actual impact, because I come back to a question I was asking earlier. If there's already political clamoring between now and in August 2022, or whenever that election cycle comes in, and I'm possibly holding dollars, then if I invest my dollars, if I invest in your fund, can I invest in dollars and you give me a dollar return? Or does your fund only take Kenya shillings and give a return in Kenya shillings?
That's a very good question. And this is something that a lot of investors have asked us. So this is how we answer it. The fund is a Kenya shilling denominated fund. So the returns we quote are Kenya shilling returns. So when we say 23%, for example, that's what we've done this year, that is a Kenya shilling return. However, if an investor comes with dollars and says, I have $100,000 and I want to invest in your fund, then what we'll tell him is, yes, we can give you a dollar return, but we'd have to hedge out your currency exchange risk, because it means that we invest in Kenya shilling denominated assets, some of them, of course, because the fund has various asset classes in different currencies that we invest in. So we'll have to hedge out your dollar risk. And at the end of your investment, then we will charge you whatever hedging costs we went through and then give you the return. So just as an indicator, I'd say you'd shed off about 10% of the value of a Kenya shilling return to dollars. So if we return, say, 23%, you'd expect to get about 13% in dollar terms. Okay,
interesting. But then, of course, it would come also at an additional cost just for facilitating.
No, that 10% represents that.
Okay, it represents that.
That's it.
Okay.
It's something we do. I mean, because even within the fund, we hedge out our exposure to the various asset classes that we trade. I mean, the various currencies that we trade. So it's something we already do for the fund, and we're happy to do it for our clients as well.
Okay.
Because we have clients who also want to invest in euros.
Exactly.
Yes.
Exactly, for different fund streams.
Yeah.
But the same way you're saying that there's a minimum size, is there a maximum size?
No, there's no maximum size.
So I can bring.
I mean, we have investors who've invested significant amounts. And then we have. And that's the beauty of this fund. So we were able to create a fund that can have all sorts of clients, institutional, high net worth, and your typical middle class investor, and still get the same returns and invest in the same asset classes. So it's a very complex fund behind the scenes, but simplified enough for everyone to understand it very easily.
Okay.
So there's really no maximum. In fact, right now what we are working towards is trying to reduce the minimum. And I remember I alluded to this last time I was here in Q3, and we have come up with a very good product, and it's in the testing phase that should actually help us to even accommodate more investors in this sort of platform. Okay, we can't wait to hear about that. I hope you'll give us the opportunity to discuss it as you're launching it. We're looking forward, yes. Okay, but then I was going to ask now, when you go to the upside in terms of the ceiling, is there an element of single obligor? Is there an element of somebody having
too much money in your fund and sort of exerting undue influence. So, for example, if Mbitha came in with 5 billion,
okay, I can't
gods,
wait.
You know, I can't wait as well. You know, I'm open to receiving 5 billion shillings or $5 million. Would you be able to accept that, or would you sort of be limited in terms of the obligatory, the obligations and the undue influence that would come with such a?
I mean, another fantastic question, and this is something that a fund like ours always has to consider. So just to explain how a fund like ours works, the funds we manage are not just the funds that we receive from investors. We also create what you call counterparty limits with other institutions, for example, other investment banks and commercial banks, both locally and internationally. So when I tell you that the fund is worth $2.5 billion, that's the funds, that's the amount of funds that we have received from investors.
Okay.
But in terms of trading limits,
yes,
it's about over 20 billion.
Okay.
Because we can trade such amounts with now other institutions that we have. So what does that do for us? Even if Mbitha came with her 5 billion, the notional size of what we trade is way larger than that.
Okay.
So it can't actually influence or cause us to have to change our trading strategy just to align with Mbitha.
Okay.
So no, it doesn't affect us. We're able to create a wide, what you call a notional amount bigger than actual amounts that we invest in.
Okay, so 5 billion, that's what I need to bring, right?
Please.
Okay, so we're almost done with the time that we have. We've talked about the different asset classes. We've talked about the performance and the expected performance for the final quarter.
Yeah.
I think what's most exciting is you're actually working on reducing the entry levels in terms of what's the minimum ticket size.
Yes.
You know, I always have to ask you about costs.
Yes.
Are you reducing the cost of operation?
Unfortunately, I feel that our management fee, I think, is the highest in the country at 5%.
Yes.
But I feel that it more than justifies how administratively intense it is to run a fund like this.
Yeah, that's true.
I mean, we trade so many asset classes. We require traders on call, essentially 24 hours a day. On top of that, you know, just the platforms required to execute the trades that we have is quite significant.
Okay. So that's not changing. That's going to stay there.
Not for now.
Okay, understood. Is there anything else that's pertinent to the fund and pertinent to global and local investing that perhaps I've omitted in our question and answer session?
I think really just to affirm that Mansa-X, due to the diversified nature of the fund, continues to be a very good tool to diversify for any investor. If you're looking to diversify whatever holdings you have, and we're not telling you to dump what you have and come into Mansa-X, you can just diversify into it. It makes a very good case for anybody who's looking to just get higher than average returns, proper liquidity, and at the same time still protect yourself, because we run this fund very conservatively.
Okay.
A lot of people do not think we do.
All right. Because
they look at our return and they say, oh, that return is so high, you guys must be taking on disproportionate risk. But it's quite the opposite. We're very conservative in our approach to markets. It's just that we have a lot more assets that we trade. That's how we're able to give a bigger return. Nothing to do with taking on more risk. Okay, and in terms of risk, your investment committee, does it have external participants or is it all internal to Standard Investment? At the moment, it's just internal. At the moment, purely because the fund is just about under 2 years old. Okay. And a lot of what we trade is very proprietary. So I'd say other than SIB themselves, the other institution with a full picture of everything we trade will be the regulator themselves, who audit and inspect us on a regular. So there's a reason for this, because I mean, we worked very hard to create this product. We're really careful not to bring it out and lose our advantage so early in the game. Okay, fantastic. Yeah. I think what I can say is December holidays are coming up, so before people go start eating mbuzis and yamachoma, perhaps this is something to look out for. Yeah. And then the absolute final question. I think we're always talking about investments here, at least in Kenya, on markets today, and at times it's a bit disheartening when you can see so much happening out there and not as much happening here. Yeah. You have been a banker for a very long time. You have worked with local as well as global brands. Yes. Is there one thing that can be done just to fix the investment climate or the investment environment in Kenya to get us actually pushing returns such as other global markets? I know we can't compare in terms of maturity, but is there one thing that could possibly change so that we could enhance the returns that we get locally? I think a lot more. I mean, the one single biggest issue for me would be we need to have a lot more capital flowing into businesses. Less capital flowing, being stuck in banks or being stuck with government debt. For example, a lot of our pension funds right now, a lot of them have over 75% of their funds in government securities. Now, that's a concern for me because if you look at what small businesses or even just small, medium enterprises out here return, if you look at the ROE, we're talking about over 30%. Those guys outperform Mansa, by the way.
That's true.
And
okay.
why isn't capital flowing to those businesses?
Okay.
Why aren't our fund managers more active in allowing capital to flow into those businesses? Because it's only when we do that that will stimulate the economy enough for it now to generate to create the sort of activity that we expect as a market, and probably then we'll see a lot more companies listing. Our private equity space is dominated by foreign players, and we don't do enough. We don't do nearly enough. We don't even reach the limit that the RBA has set for pension funds, for example. So I think that's the one place I'd say, because that's the easier one.
Okay.
And then I'd say the regulator has opened up the market to more innovative products with the sandbox, for example. We expect that a lot more participants should be getting into this and coming up with there's no excuse right now, I'd say, not to create something innovative.
Okay.
There's no excuse now for trustees to keep accepting lower returns for their investors. There's no excuse anymore. They should now embody and accept innovative ways to make money, because they are there. I mean, in fact, the fact that we are a growing economy means that we have more opportunities than even us. I mean, if you go to Europe right now, the opportunities are so few in terms of making outsized returns. You come to Kenya, there are so many opportunities because the market has a lot of things that have not yet been done. The only thing missing is flow of capital.
So then can you take that flow in terms of Mansa-X? Would you consider taking that kind of risk in companies?
Yes, we would.
Okay.
I don't, because I think if you look at a lot of our successful companies in Kenya, most of them, without an exception, have some sort of private equity investor in there. But however, most of them tend to be foreign private equity firms. So the question is, why can those guys see opportunities here that we always miss somewhat? Why?
Okay. All right.
So there's a question there.
All right. That now has become an ongoing conversation in terms of what can we do at least over subsequent periods. That's all from us. Is there any parting word that you'd like to leave our audience with?
Well, I mean, just excited about Q4.
Q4 is exciting.
Excited.
Okay, fantastic.
Let's hope we close well.
All right, we also hope you do that as well.
Thank
you so much for your time. That was Mr. Nahashon Mungai. He is an executive director at Standard Investment Bank. It's always interesting just trying to understand what is happening with this particular fund and also getting a sense of what is happening to global equities as well as global asset classes such as commodities and forex exchange. Now, this particular fund reported 29.3 percentage point return for the last quarter. What kind of return did you report for your own personal portfolio? I hope if nothing else, you've been able to learn one thing or two, and we eagerly await to see what happens in terms of the outlook of this fund. And Nahashon is telling us at some point there will be a lower entry level. Currently, the minimum investment is 250,000, and you invest this and you get have to pay off 5% in terms of management fee, then you get a higher return. That's all we had for you. We are happy to continue fronting your questions on your behalf. That's all from us today. I'm Bithe Mwema, your host for Markets Today. See you same time tomorrow. Good afternoon.